China turns silver from a metal into future leverage. And when a rising superpower controls a material in which the future is going to be ran off of, this isn't bullish, this is strategic warfare. And most investors are still looking at silver as just another commodity chart and missing the bigger picture at hand. And in this video, I'm not going to tell you where the price of silver is going to be next month, because that's sheer speculation, just a coin flip. It's what people want to do to get hype videos out. I'm going to tell you a much bigger picture, why China is quietly locking down silver global supply chains, which is a very big deal, how this ties into their move away from the US dollar, and why silver is structurally different from almost every single other asset class that you own. And by the end, you won't just look at silver as a trade or a rising asset class, you'll see it as the Achilles heel to the US dollar. If you're new here, welcome. My name is Matt. I've been in the financial industry for several years, and I've had the pleasure to work with some of the greatest investors of all time. And in this channel, I talk about how investors can get their edge in an ever-changing landscape. So let's talk about what's really happening, because this is about money. It's about power and who gets to build the future. Let's start by separating gold and silver, because they play very different roles in this story. Gold is about trust. It's about credibility of money. It's about what backs currencies when people stop trusting governments and central banks. That's why China and other BRICS countries are buying gold hand over fist. They're building exchanges, they're creating settlement systems, they're working on ways to move gold between countries without touching the US dollar. Gold is their way of saying, if you want a monetary system outside of the US dollar, we've got you. Silver is not that. Silver is something else. Silver is about control, because silver is in everything that makes the modern world run. Solar panels, electric vehicles, high-end chips, data centers, missile guidance, satellites, telecom infrastructures, military electronics, and the list goes on. If you shut down silver, you don't just hurt investors, you slow down entire industries, you delay the energy transition, you disrupt AI build out, and you weaken military capabilities. So if gold is about rebuilding trust and money, silver is about controlling who gets to participate in a future that's ran on it. Now let's talk about how silver is priced, because most people see one number on a chart and think that it's the whole story. But it's not. There are two big worlds for silver, the Western futures world and the Eastern physical world. Now in the West, you have exchanges like COMEX, and that's where paper silver trades, futures contracts, hedging, speculation. Most people never even take delivery of those contracts. They settle in cash. Inside COMEX approved vaults, there are two main categories, eligible silver and registered silver. Now, eligible silver is just storage. It belongs to someone. It's not for delivery. Registered silver is different. That's what can be delivered if someone stands for physical metal when their contract expires. And here's the issue. The amount of registered silver in those vaults is only a fraction of annual global demand. You build a market pricing billions of ounces in contracts backed by a pool of physical metal that isn't even close to that. Now on the other side of the world, you have Shanghai. Shanghai is where physical silver inside of China trades. That market reflects what buyers are willing to pay for real deliverable metal. Metal that can go into factories, solar lines, chip plants, and so on. Most of the time, those two worlds stay reasonably in sync. Price in the West and the price in the East track one another within a small gap. Now, when the gap is small, it means arbitrage traders are doing their job. They buy where it's cheap and then they sell where it's more expensive. They move metal, the prices converge. But when the gap between Shanghai's physical price and the Western's paper prices blows out and stays extremely wide, it's a sign that physical metal isn't moving freely, that the ability to move silver from one system to the other is breaking down. When physical markets start to decouple from paper markets, something deeper is shifting, and right now that shift favors China. To understand why China is doing what they're doing today, you have to go back in time. For a long stretch of history, China didn't run on gold, it ran on silver. Taxes were paid in silver, big transactions were settled in silver, trade balances were recorded in silver by weight. Silver wasn't just a metal. It was essentially the backbone of the entire system. From roughly the 1500s to the 1800s, enormous amounts of silver flowed into China. If you wanted what China produced, you paid in silver. Silver stabilized prices. It stabilized income. It stabilized tax bases. It worked. Until it didn't. Now in 1930s, the United States passed a policy that led to a huge governmental purchase of silver. Those policies pushed the global price of silver sharply higher. Now for a country running on silver standard, that was a complete disaster. As prices spiked, silver started flowing out of China and the monetary base got drained. Money left the country. The domestic economy was starved of the very thing that it relied on, and the prices inside China began to fall and deflation started to set in. At first, deflation sounds good. Oh, we get lower prices, we have cheaper goods. But persistent deflation completely kills economies. Now in my last video, I mentioned how Ben Bernanke and the Fed will always choose inflation over deflation because inflation may be painful, but deflation will completely destroy an entire economy. If you haven't seen that video, go check it out. Because when deflation starts, people think it's good. But the longer it goes on, people start to delay purchases, they delay investments, and they start hoarding cash, which causes businesses to start shrinking and stop hiring, and the economy starts to eat itself. If you know something will be cheaper tomorrow, you'll just wait. Multiply that decision across millions of people. You have a downward spiral. That is what China lived through. So in the mid-1930s, China abandoned the silver standard and went to paper money, not because silver failed, but because they learned a brutal lesson. If your entire system depends on a material that you don't control, that means someone else can weaponize it against you. That lesson has never left China's political memory. Now fast forward to today. China is no longer a country being squeezed by someone else's silver policies. It's a country positioning itself to squeeze others. Recently, China reclassified silver as dual-use material. Now that term may sound harmless. Dual-use means a material that has both civilian and strategic or military importance. And once something is categorized as that, exports are no longer automatic. They require governmental approval. They require licensing. On paper, this is not a ban. China can say, we're not attacking anyone. We're just regulating a strategic resource. In practice, the rules can be written so narrowly, few foreign buyers get reliable access. And even when they do, approvals can be delayed or restricted whenever Beijing wants leverage. Now, why does this matter? Because China sits in the middle of a global silver supply chain. Most silver is not mined as its own dedicated project. It comes out of the ground as a byproduct of mining for other metals like lead, zinc, and copper. Once that array is extracted, it has to be refined and processed to be produced as usable silver. A massive chunk of that refining capacity sits inside of China. So even if the silver is pulled out of the ground in Mexico or Australia, there's a good chance that it's going to have to pass through Chinese infrastructure before it becomes a bar, a wafer, or industry feedstock. Now, when you combine that reality with export controls and dual-use classification, you're not just regulating a commodity, you are installing a valve on the global industrial system. And this isn't their first rodeo. So if this sounds familiar, it's because China has done it before. Over the past decade, China built nearly total dominance over rare earth refining. We're talking about elements that go into electric motors, wind turbines, precision weapons, and advanced electronics. China reclassified them as strategic. It imposed quotas, it tightened export licenses, and prices surged. Governments in the US, Europe, and Japan scrambled. Only then did they realize that you can't build critical processing infrastructure overnight. It takes years, in some cases over a decade. The playbook is already written. Gain control of the refineries, reclassify as strategic, tighten exports, and let the world recognize the dependency is already too late. The difference this time is simple. Rare earths are specialized. Silver is everywhere. Most people think in simple terms. Prices go up, producers produce more, problem solved. Silver doesn't work like that. Remember, majority of silver supply is a byproduct of mining for other metals. Miners don't open a new multi-billion-dollar copper project just because the price of silver ticked higher. They make decisions based on copper prices, zinc prices, lead prices, and demand for those primary metals. That's what economists call inelastic supply. Supply that doesn't respond quickly or directly to price. You also have inelastic demand. Let me explain. If coffee doubles in prices, some people will just drink less coffee. If a luxury handbag doubles in prices, people delay the purchase. But if silver doubles in price, the factory building solar panels doesn't get the luxury to just shut it down and buy later. The defense contractor doesn't pause missile production. The data center doesn't stop producing less chips. They need the metal. So they have to pay the price or end up just falling behind to the people that are paying the price. So if you have a material where the supply doesn't ramp easily, demand doesn't fall easily, and one country dominates refining, is now tightening export rules, you don't need to be a trader to understand where that leads. You need to understand power. Now let me be crystal clear. This is not silver to the moon prediction. Silver has a habit. It does almost nothing for long stretches, then something changes in infrastructure of the market, like physical supplies tightening, inventories drain, policies shift, and the price starts moving in violent bursts. History is full of these episodes. Long periods of boredom followed by parabolic spikes. When supply is concentrated and demand can't back off, prices don't adjust gently. They gap. It overshoots. It invites speculators. At that point, you get two layers: the fundamental layer and the speculation layer. The fundamental layer is factories, governments, and industries that need silver, regardless of the price. The speculation layer is the traders and investors chasing the move. So when those two layers stack on top of one another, you get a brutal move to the upside. When the speculative layer gets shaken out, you get brutal downside. But here's the key. The world doesn't need less silver when the price of silver corrects. The physical need is still there. The structure of silver is still there. The geopolitical strategy of silver is still there, and only the speculators leave. So let's zoom out. We've had a run in gold. We've had a run in certain tech names. We've seen capital surge into AI, chips, energy transition names, and now silver. Everyone keeps asking, what's the next trade? Where does the money go after this? And those are the wrong questions. The right question is, who controls the materials that all of those trades depend on? Because in a world that is moving away from a single dominant reserve currency, leverage doesn't come only from printing money. It comes from controlling the bottlenecks. BRICS countries are trying to rebuild trust in money using gold, decentralized custody of that gold, alternative settlement rails. At the same time, they are moving to control key inputs in the real economy, and that is silver, rare earths, that is energy. If you don't control money rails and the materials, you don't influence price, you influence who can build, who has to ask for your financing, and who has to accept your terms. Now that is leverage, and that is the bigger picture at hand. So what do you do with all of this as an investor or just someone trying to understand the world? Well, first, stop looking at silver as just a metal that trades up or down, and start seeing it as a strategic input tied to energy, technology, and defense. And those are all very specific sectors inside of a country that has economies at scale in which you could potentially participate in. So if China is getting leverage in owning a material in which the future is going to be built off of, investors would be wise to look to China. Secondly, you need to understand that paper markets and physical markets can diverge. If your entire worldview is based on a single chart price, you're missing half the story. See, I've been an investor in silver for many years, and that's because I understood the worldview, not because I looked at the prices of silver and thought it would trade higher. I understood the fundamentals underneath it and the reason why it was extremely undervalued. I've been buying silver hand over fist since 2015. And when you buy things out of conviction because you understand where they are going to be used and how they're going to be used, you're not looking at charts on a screen or candles and when this monthly candle is going to close to give me a buy signal. You're looking at the underlying mechanism that is driving this price higher, which brings me to point 3. You need to recognize the bigger pattern. We're shifting from a world where one country set the rules to a world where several powers compete, currencies compete, settlement systems compete, resource supply chains compete, and in a world, control over critical material becomes a new kind of currency. And the last thing I think every investor should consider is finding something that gives you a market neutral edge. You need to find ways in which your portfolio can perform regardless of asset classes trending higher or trading lower. And with the advancements in technology and AI, there are softwares that are readily available to you and myself in which I use on this channel, and I believe this is a glimpse into the future of trading and investing. You see, these kinds of technologies and softwares were only available to people who were accredited investors that could afford to be involved in these funds that would leverage these kinds of quantitative tools. But you can get access to these kinds of softwares just by hitting the link down in the description below. And if you found value in this video, please hit subscribe. Thanks for watching. I will see you on the next one.